Good morning. It's Thursday, December 18th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So my partner, Bill Baruch, he's in New York, and he will be live on CNBC for the full hour block starting at 11 a.m. Central Time on CNBC's halftime show. He's going to be discussing some of our latest portfolio moves for our sister company, Blue Line Capital, as well as Micron. Micron's a name that we've consistently maintained for our clients here, and with the recent rally, it's pushed itself back up into the top 10 holdings. You look at Micron overnight, up about $25 or 11% to $250 per share. Now you look at the precious metals complex, gold taking a bit of a breather, down about $16, $43.57 after reaching an overnight high, $43.75. You got silver down 50 cents at $66.41. That reached an all-time high yesterday at $67.18. You look at copper futures rebounding, making a new high in the overnight session at $5.43. And you got platinum futures up at $19.62. That's up about $25. Now gold is fluctuating near its record highs here as investors are monitoring the rising tensions between U.S., Venezuela, and also the anticipated upcoming U.S. inflation data. The Federal Reserve had implemented its third consecutive interest rate cut last week, but it's really unclear as far as the pace of monetary easing for the upcoming year. Meanwhile, platinum has continued its impressive rally, soaring close to that 2000 mark, getting to 1995.60 before pairing some of its gains. Now you look at gold after 4 days of consolidation, the chart really looking like it's pointing to a move back up to that 44.30 an ounce. That's an all-time high, with dips likely to stay supported around 41.90. Only a breakdown below that 39.70 really deters this bullish trend that we're in. Now you look at the broader market stocks, they are set to rebound after Wednesday's tech-led sell-off here, with Micron's upbeat forecast giving some reassurance to this AI narrative. Now we will have the November CPI report. That's the key data point here today. And after 4 straight down days, the S&P 500 up about 0.5% at 68.11. You also have the the Nasdaq under just about 1% at 25,108. And then you got the Russell up about 0.4% at 2521. So a big snapback here, a little bit of a mini Santa Claus rally could be starting here. And it's likely hinges on whether this inflation data confirms Powell's expectations that the core goods that are priced are at a peak. Long-term inflation looks like it's coming down, where the jobs are subdued, and it should weaken those hawkish FOMC members and the resistance to the interest rate cuts. Now, data aside here, President Trump says he plans to announce a new Fed chairman soon. It's someone who he believes will lower interest rates. So that's why I am structurally myself positioning technically. Looks like the upside here on the U.S. equity market. So some sectors in focus. You are going to have chip stocks there in focus after Micron's current quarter earnings were well beyond analyst expectations, and it's benefiting from the relentless demand for memory chips used in its data centers. Now, currencies in focus. The British pound is the one to watch here today, because some of the global events that we have that are unraveling here are interest rate decisions from the ECB, the Bank of Japan, and the Bank of England. Someone asked me yesterday, just randomly, why is the Bank of Japan important? Because of the fact that their interest rates are so low. What happens is if you're in Japan, you borrow Japanese yen at a low interest rate. You take that, you convert it over into US dollars. You take those US dollars and you buy tech stocks and things like that, the AI play. When they raise interest rates, the Bank of Japan, it costs more for that borrowing. So what people do is they have to sell out some of those AI, some of the tech stocks. That's where you get pressure on the U.S. equity markets. They bring it back to dollars, they convert it back to Japanese yen, and they pay back that interest rate charge that they're getting. So that's the unwind of the carry trade, if you didn't know. Now looking at some of the interest rate expectations, January 28th, that's that next meeting. Bit of a snapback, 26.6% likelihood that the Fed will cut rates by 25 basis points. And you go to earnings, we're going to have Accenture, Darden Restaurants. Those are two of the companies that are reporting in the pre-market. We'll have FedEx and Nike due out later here. FedEx is expected to report profits and margins ahead of those expectations as the company has a multi-year network restructuring that are starting to show some results. Again, we'll have that CPI data coming out for November at 7:30. And then you get to the FX markets, the risk, the rundown here. Dollar for March, 98.14. 114, little movement there. You also get the euro currency, 117.73, kind of paring back some of its gains. You got 10-year treasury yields, big drop, big slide, 4.13%. And you get the VIX here jumping up because it rolls over to January, 1851. Bitcoin futures, 87,300, really quite range bound here, kind of operating as its own animal spirits at the moment. You get the S&P 500, the gamma exposure, which is really important to watch here. It's fallen back into a negative gamma regime, signaling the conditions for higher volatility are in play. Remember, on Friday, we're going to have about $5.2 trillion of notional open interest linked to the SPY and the SPX here, set to expire and roll over to the new year, and it's going to be the largest notional expiration on record. We look over what's happening in Europe and Asia. Well, those European stocks, they edged higher, looking ahead to that interest rate decision by the ECB and the Bank of England. And you go over to Asian equities, well, they slid a bit here with South Korea leading the broad off here with some concerns over AI, with the MSCI Asia Pacific Index falling about 0.4%, tracking that US-led sell-off that we saw yesterday, declining for the third time in 4 days. The ETF flows, as far as precious metals are concerned, well, they were selling some gold, they were selling some silver, which makes sense. You get all-time highs. You get gold also pushing back up to some resistance levels, so trimming a bit of gains there. But the exchange-traded funds, they cut only about 83,000 troy ounces of gold in their holdings, and the total gold held by ETFs rose about 18% to 98.3. You look at total silver holdings here, rising 19% year to date. They cut about 1.8 million ounces, and palladium continues to increase here. So it's been up for 11 straight days on those ETF flows. So investors are catching on to the broadening rally. I've had a lot of people asking me about silver. What do you think about silver? Silver breaking out. I'm like, forget silver. Look at platinum. That's been exploding here. And I told a lot of the people that I really believe that $2,000 an ounce is in the cards. And we almost hit that last night with a lot of clients having call spreads on in the platinum market. So you get the gold silver ratio dropping to 65 to 1. And I looked when I started in this career, it was about 45 to 1, shot up to about 65.70. The lowest I ever seen it was 32 to 1 during COVID. And then the highest I've seen is about 120 to 1. So it's kind of been all over the place. It's just interesting to watch from it's not actionable, but why I say it's interesting because I can look at it where it's at these different levels. And you could just tell me, hey, when it's at this level, what was going on at that period of time here? Was it the financial crisis? Was it COVID? Was it a launch of a gold ETF, which drug it away from that silver market? That was one of the first ETFs in the commodity space, was that GLD. So it's just something that when I look at it, it's just a roadmap or a history map of where my career has gone, because I've done this for over 25 years. So if you guys got any questions, shoot an email. You want to learn more about, say you're not a futures type of person, but you're interested in wealth management, we do have some of the miners. We've got a concentrated mining alpha portfolio as well on the stock side here. Reach out to me, send an email to info@bluelionfutures.com. I'll connect you with our VP of Client Strategy. We can further discuss some of the portfolio type of solutions and other ideas that we have for you in your trading accounts. So remember that futures and option trading, it does involve risk of loss, and it may not be suitable to all investors. Good luck, good trading.